trading view and others. We are going to talk about, let me see what's on my schedule. Yeah, we've been looking at the introduction, and today we are going to look at some of the basic concepts. I mean, if you're to have knowledge about something, there has to be a foundation for it. So today we are going to be looking at that foundation into trading. Hold on, I'm waiting for that price to be hit, then we can start. Why is it taking long? It's supposed to be right now. By the way, that's my take profit. That's why I'm waiting for it to be. Okay. Shouldn't be taking this long. So we won't wait for it if it's going to take us this long. Yeah, it's going to be hit in about, it's supposed to be right in this region in the next 10 minutes. Okay, just go through. Thank you. All right, we can now start our lecture for today. Allow me remove this rubbish. It's done its work. So that's it. We're going to be looking at this. Maybe foundation class. Okay, welcome to the foundational class. We are going to be looking at we're going to look at basically the market, but what we are going to look at, we are going to see the bulls, the bears and bulls, trends and trend identification. Yeah, it should be a short lecture, but we are not sure of how short it will be, so let us start on. So as you've seen, the market is divided into two parts, or as you've seen the candles, we're having two candles. There is a green one and a red one. The green one is normally what I term as bulls or bullish candle. In fact, it's a common term across the forex industry, so it's not only me who terms it as bullish. Therefore, whenever we are seeing the market moving up, it is a bullish move, and whenever we see a market moving down, like what we've just seen in the previous minutes, it's a bearish move. So let me just get you the definition of these candles. So we have our candle right here. This is our bullish candle, right? Have our bullish candle right there, just getting you to be able to identify the different terms that we are going to be using as we are relating to these candles here. Understand? I think this midpoint should first get off. The advantage is we're not learning this on a weekend, therefore we can already see this stuff happening live. Let me first get out the middle line. Thank you. That's our bullish candle, right? So our bullish candle or any other candle has 3 parts. We shall have that, but this is specifically for bullish. That, yeah. Then we shall have this. These are parts of a candle, and this. Trust me, you're going to need to know whatever I'm going to give out. So of course there is a part that I've not highlighted, which is I'll do this. Click here, give me this. Click here, give me that. Get something like this. It's been a struggle. Oh, should have done this actually. Alright, this can be deleted. So when we're identifying the last part that I've just drawn, that's the body of the candle. Then this you see right here is the open for the bullish candle, opening price, or open, or be like opening price, but you can call it the open or open. I'm not going to tell you to look for a notebook and take notes. That's upon you. I'm already giving you this for free. You should be appreciative. So this is the closing price, or the close. This becomes our high. Oh, where have the words gone? This becomes our high. Oh, I had to do that. Okay, let me just do this real quick. Close. This is our low. I don't know why my words keep disappearing. We call this the close. One last time, if it disappears, it's up to it. It actually behaves when I get my temper. This is the body right there. So you've noticed there is this distance from the close to the high, that and another one here. This right here, we call it a wick. A wick. So any candle. Oh, I've seen my mistake. I don't click after to enter the command. So yeah, so that's our bullish candle. We have of course any candle has to have a wick, a body, and a wick. Though all the wicks are optional on some candles, as we shall see. There are some candles that just be plain bodies, no wicks. That shows that the market is actually heavily moving to that direction. So yeah, this is for the bullish candle. This shall be our low. That is the lowest price at the wick. then the opening price is where the candle opens, then the closing price is where the candle closes, then the high is the highest price the candle reached before it closes. So if I'm just to take you through how these candles operate, in most cases the candle shall appear from this is the current price, this is the current price, then it will go down, that is creating that wick, then go up to the highest price, that is the candle's high, then it will reach back to our closing price, which is exactly what you see here. This is the wick, this is the candle, and closing price, opening price, this is the body, which is right here. So for a bearish candle, it's the same, though this remains the high, the low is the lowest price the candle has traded, the high is the highest price the candle has traded, the body is, or it's that distance between the close and the open of the candle, then the wick is the extension to the highs and the lows. I think you understand that. Then this is our bearish candle, our high is the highest price of course it has traded. Remember, for bearish we are moving down, so the highest price it has traded, then the low is the lowest price it has traded, the close remains constant, and the open, it opens from up. So the difference between these two candles is that whereas the bearish candle opens from up and closes from down, the bullish candle will open from down and close from up, as we've seen. So I can take off this and we can look at it from actual charts. Allow me invert the scale back. So this is our bearish candle, as you can see. Any of the black candles you can be picked as bearish. Now this is called a doji candle, this one right here. It doesn't have a body, or one with a relatively small body. This is a doji, this is a doji, this is also a doji. Then if the wick of the candle is longer than the body, then it's a doji. You understand? Yeah. Then the rest are normal candles. As you can see, this is a normal bullish candle, this is a doji but it's bullish. So that's it. So this is our opening price, this is our closing price. Like the candle prints downwards, that's a bearish candle, and then this is our opening price, this is our closing price, that's a bullish candle, and it prints upwards. Let me see if I can get you some live data. Right here. So we are having our bullish formation there. A bullish candle is an up close candle, while a bearish candle is a down close candle. Remember, bulls are up, bears are down. So keep that in mind, because it's going to be among the leading things as we are doing these lectures. So you see that, that's a bullish candle. That is also bullish. As I explained, opens, creates a wick, then expands up, then closes. Alright, I want to see just one bearish candle so that the examples are valid and we can move on to something else. I think if that turns bearish, nope, it's not turning bearish. Okay, now that's our bearish candle that we asked for. Oh no, it isn't. Oh wow. Oh, we are okay. I should expect one around here, around this region, right there. That's still bullish. Should expect a bearish candle around that region. If it doesn't surface in that region, then we can move on, but you've gotten the concept. That candle is supposed to be bearish, so if it's not bearish, that's it. It has refused to be bearish, and so we can just now move on to the next oh, it's coming, still information. We wait for its close. If it's non-bearish, then we move on to the next item. Yeah, told it had to be bearish. Anyway, don't mind this. This is just I do that stuff for fun. You shouldn't be saying that I know too much or I'm the one who makes these markets now. I just do that for fun. Anyway, so with what we have heard and said, no, we are not looking at charts right now. We are still in learning stages, so I know how you like. All right, here we are back to what we were studying, right? I can now clear the candles since we've talked about them. So now we are going to talk about trends. Remember, we first introduced bulls and bears, and that's for the reason because we are going to be using those terms like bullish, bearish. Sounds fancy. We want to look at trends. There are two main types of trends. I'll my texts here. There are two main kinds of trends. We are having the uptrend, which is bullish trend. Remember we talked about the bullish candles being the up close candles, so it's having characteristics of bullishness. It has a lot of bullish candles and so many. We shall look at it in the breakdown. Then we have also the downtrend, which is bearish in this case. So its other name is bearish trend. Yes. Then in between that we normally have the consolidation. What people normally refer to as sideways. So these are our trends: uptrend, downtrend, and consolidation or sideways. So let us start with the uptrend. Of course, as you hear the name, it means this is a trend where we are expecting upward movement or we are expecting higher prices. So that's one of its characteristics. So it's pushing for higher prices. Here, like I said, we expect higher prices. Come on. Higher prices. We also expect seeing more bullish candles than bearish. Then what else? Okay, I think that's it, because the rest I'm going to explain it. Let me just write it down, but I'm going to explain it. It's not for right now. That is, we also expect the trend to give us higher highs, and lower highs. Oh, how did this happen? Lower highs right here. There. So that's our come on. So I'm going to illustrate this just in a few. Uptrend, then of course we are having an uptrend against a downtrend, so we shall have our downtrend right here. Downtrend to give us this character. So like I said, we shall be expecting the downtrend. We are first of all going to be looking for lower prices, then we shall expect more bearish candles. Of course we shall have to see lower lows and lower highs. Now what are lower lows and lower highs? Remember, when I was talking about a candle, I talked about its high, low, open, close, and as well as the body. Okay, I haven't drawn anything there, so don't assume, but yeah, it's what I mean. Then that means for lower lows we shall be seeing more lows being created, and lower highs, it will mean the highs do not take out the previous highs, something like that. So let's just have a visual illustration of it. Let me see, for a bullish trend, that's our bullish trend. Start from here, come here, go up here, main trend, retracement, main trend, retracement, main trend, until the level of price rejection. Well, as for our bearish trend, we shall have this, come back here, this, come back here, main trend, retracement, main trend, yeah, something like that. So at this point, so now this is what I was meaning by higher highs and higher lows. You see this? This is a high. This is a high. I want to get it right here, text. This is a high. Then if you look at that high, this high would be higher compared to it. See this? We call it a higher high. Does it make sense now? Hope that makes sense now. Higher highs, and then now we can also look at the lows. There is this low here. We also have this low here, and this low here, right there. Then we also have our initial low. Let me just take it a bit lower, where our trend started from. Something like that. Yeah, I hope I can make this thing lows to red. Red. All right. Yeah. So we are looking at these lows. Let's start from down here. A low was formed, our initial low. Let me just call it low. Yeah, and then another low was formed during the retracement, but the low did not take out the previous low. That means we we have a higher low. Not certain. This shall be our higher low, and then another low right here has been formed during retracement, but it hasn't taken out the previous low, therefore still a what? A higher low. I think the same applies to this. So that's how we characterize an uptrend. It's just basically higher lows, lower highs, higher highs and lower highs. Oh no, higher highs and higher lows. This was a mistake. Higher lows should be higher lows. Yeah, higher highs, keep creating higher highs, and keep creating higher lows. That means we do not take out the previous low. So let's flip the coin to the bearish side in a downtrend. In our bearish trend, you can see that the prices, the price levels, or the price that we are aiming for is of course lower price, because every time we keep moving, for example from this price here, 21,900 to around here 21,700, you can see that 21,900 is higher than 21,700. So we keep chasing for lower prices. That's one characteristic of the downtrend. Then of course we expect to see more bearish candles. Then we want to see lower lows created and lower highs. You understand? Hope it makes sense. Let me just create a template for more explanation here. So we have that high, market trades down to a region where it's fit to retrace, right there, creates that low. So this is our high, this is our low. Let's first name that. That's high. That's high. Give me a color of green for highs. And this is our low. Give me red. Yeah. And then you can see that relative to this high, we had to engage with another high, but didn't take out the previous high, therefore it becomes our lower high. As you can see here, lower high. The same applies to this. We've created a low lower than the previous low, that makes it our lower low. You've seen that? Yeah, so this is let me read. Thank you. On this, this is the top characteristic. We keep seeing lower lows and lower highs. For the highs will not take out the previous high. The new high does not take out the previous high. That means we are in a bearish trend. Right there, until we keep pushing for lower prices. So we shall keep having lower lows and higher lows, lower lows, higher lows, lower lows, higher lows. That's how you know that we are in a bullish trend or in a bearish trend. For the bullish, we shall keep having higher highs, higher lows, higher highs, higher lows. That's bullish. And for bearish, we shall keep having lower highs and lower lows, lower highs, lower lows. You get? So the emphasis is on higher and lower. That's the key definition for our trend. Okay, that's insightful. What else did I have to talk about? Let me check my channel. So as price moves from one region to another, it's going to meet areas of support and areas of resistance. I'm not teaching support and resistance, so you know, but I just need you to understand their meaning, because there will be terms that we shall use in the nearby future. So this is not support and resistance, trust me. It's just a term that I want to include in teaching, so I want to make sure that you're all at par when I'm using it. So this shall be our area of support, and this shall be our area of resistance. So price shall move from the support area. That means it's moving in a bullish move until it reaches a place where it is resisted from continuing upwards. That means it's now going to turn bearish. Understand? So basically what I'm trying to do here, just getting you understand the two terms, support and resistance. Well, for support, it is an area where price is expected to return and not exceed, while for a resistance, it's an area where price is expected to return and not exceed, but that's in a bullish move, and support is in a bearish move. Like bearishness should not exceed the support level, and bullishness should not exceed the resistance level. So yeah, that's all I had to explain. I'm not teaching you support and resistance, so let's get this stuff off my charts. It's very nasty to talk about. What I didn't talk about maybe was if price exceeds that point. Let me say this was the support and price exceeds it. Remember, support is supposed to take price up, and supposing it reaches the resistance and exceeds the support level, the retracement back to this level will become now the resistance. This new level will become the resistance, and it's no longer the support. So this is now a support becomes resistance. Becomes resistance. Yes, and then of course the reverse is true. If we are moving upwards and we exceed the resistance point, and then price comes back and rebalances at that point, then the resistance will become the new support. Okay, that's very easy, and we shall meet it in the nearby future. That's why I had to explain it. I hope you're taking your notes. Okay, so with that said and done, we are going to look at the trends as I've been explaining. I think I will use DXY maybe. This is our DXY chart. So it's a lot that is going to confuse you here, so let me first hide this. So I will take them off. Let me just hide them. So here we go. Take this, take it off, take off, take off, take off, take off, take off, take off. Alright, now it's something you can understand. Fine, so I just want you to identify trends. That's going to be part of your assignment. You identify trends, which trend we are in. Are we bullish, are we bearish? And you do that with the support of higher highs, higher lows, lower highs, lower lows. Understand? For example, this to this, then we have this high, then we have this, then You have that. You see, you have that. Still continuing. Actually, I have to take this. This has to be here, from here, from there, right there. So we have that, and that's our trend. You see it? That's our trend. So if we are to take off this chart, you would see that it gives us the trend that we were looking for, where we have this low, and then we have a higher low, this is a higher high compared to this. See that? So this is higher low, this is higher high. See, should be that easy. Higher low, higher high. This is our initial low, and this is our initial high. So if the previous high does not take out this, and if the previous low does not take out this low, we are bullish. As you've seen the trend, we are looking for higher prices. This is original high. See that? Okay. For the lows, I normally want them red. You'll see why in the near future, and the highs I want them green, just for easy identification at what I'm looking at. Let me use this trend line also, give it a green color for easy identification. Green color. Maybe increase the thickness a little bit so we can have what we are looking for. Let's see this. That's our uptrend. Then we can also have a look at the bearish trend. This is the initial high, then the previous high didn't take out this, so we have a lower high. A lower high. This is our initial high. So we put our term there high, and we have this as our low. Those should be the first two things, to project the high and the low. Then now from that you're supposed to see the next high. Is it taking out the previous high? No. What does that make it? It makes it a lower high. So this is our lower high, and then this shall be our lower low. Lower. You see that? So the same shall keep happening. Oh, you're wondering why I haven't highlighted. Okay, remove from here to here, and you have this. It is clear as far as this. Or hold on, I just want to get this straight from here up to this low. Yeah, this did not take out that. Then we have this. We have this return. See, until this this low here. That right there is our bearish trend. All right, enough decorations. all right. So with that said, I think this has been among the long lectures. I like keeping these lectures short so that you don't get tired, I'm sure. The attention span is still low for now since it's the beginning, but that's what I had to share with you today. Good luck, enjoy. Plus don't forget your assignments. You're supposed to look for these things yourselves so that you can see them and help you build the memory and, should I say, skill of identifying them very fast, like I do, of course. All right, thank you. Enjoy the rest of your day.